Hey everybody, Boris speaking Force. Welcome to the weekly technicals for the commodity dollars for Aussie dollar, dollar CAD, Kiwi dollar, Jan 28th to Feb 1, 2018. I think the most interesting story in the COM dollars was the kind of collapse and comeback of the COM dollars into the week, which essentially, ironically enough, left the ranges pretty much where they stood last week. We're still 71.72 in Aussie, still 32, 34 in CAD. The only thing that sort of moved a little bit to the up end actually is Kiwi, which now sees resistance at the 69 level. But we had a massive sell-off essentially like into Wednesday, Thursday, and then it came back with a viciousness, a very, very strong risk-on covering rally into Friday, which gives us a lot of momentum into the start of the week. Now, the calendar next week actually doesn't carry a lot of COM dollar data. We do have a couple of, though, very important data points. On Monday, the Kiwi trade balance data should be pretty interesting, and we're bullish that data set. On Tuesday, the very, very important CPI data out of Australia. Now, we're bearish this data set because price pressures in Australia have really been quite low. And there's a sort of a secular short consensus view against the Australian dollar. The Chinese slowdown, the collapse of the housing market, the decline in commodity prices, all of those things, everybody is kind of betting on the decline of the Australian dollar. Yet, despite all that, I think in some ways it's interesting. The paradigm of how people study Australia, I think, may be trapped in the past because it seems that the only thing that people view Australia at is just a sort of a mining giant rather than a relatively well-diversified services enhanced economy. And you see this dichotomy, in my opinion, in the labor data, which should be much, much weaker given all of the negative headwinds that Australia has on the commodity front. The fact that labor data continues to surprise to the upside shows the relative rebalancing of the Australian economy over the last 10 years that could provide a little bit of a cushion. Having said this, though, the long-term bias is still negative, but the short-term bias right now certainly seems positive just over the next several days on risk-on flows. And 72 is very much in view as we open up the week for the Aussie dollar. Now, into the rest of the week, we don't have any, we don't even have Canadian data because Canadian labor data is going to come out, I guess. Oh, no, I take it back. We have Canadian GDP data on Thursday. I was just actually moving myself too fast, which the market is looking for a 2.2 print. We're a little bit bearish this because we had very weak trade balance numbers and weak retail sales data. And then on Friday, we don't have, I thought we would have the Canadian data, but I guess it's going to be next week. Sometimes they're like a week behind us. So it really is going to be focused as far as the calendar goes. The Australian PPI, the Kiwi trade data, and the GDP out of Canada on Thursday. Looking at the charts are sort of very interesting. As I said, it was really a complete change. If you look at this, we ran up to the 34s. Today's big move, these are all risk-on moves. They did stop at key support levels, key resistance levels as we go forward. So clearly this 32 is a big, big level. But this massive, massive sharp decline suggests that we could have further downside here, perhaps, especially if we test the 32s. It really opens up the full gamut towards the 130 level on a stronger risk-on trade. This is essentially could be driven by a couple of things. Sort of the idea that the worst of the shutdown woes are over, that U.S. now is going to focus on trying to do some kind of a trade deal with China, and all of the fears and angst that has been just building inside the financial assets over the last couple of months could see a small relief rally, and this relief rally could have some continuation. So essentially, if you're just looking at momentum trades, certainly the commodity trades showing you the strongest momentum here with dollar CAD to the downside, Aussie CAD to the upside. Look at this huge breakout. We engulfed not one, not two, not three, I think 4 days of price action. That's a very, very bullish move. And you can see that when you have these kind of engulfing moves, especially in the Aussie, which tends to have very, very clean continuation moves. Here's an example where we had continuation move. Here's an example where we have a continuation move. And sometimes, depending on where we are in the trend. I guess this was a relatively strong continuation move, but this was not because it came at the far end of this downward cycle. We're not at the far end of this upward cycle. The upward cycle really doesn't tap out until the 72, 73 zone. So there's still scope for the upside, which is why I think the calm dollar trades here really have potential into the front of the week. And Aussie certainly has a chance to run here as it goes from around 71 all the way to probably around 72.50 would be the key resist level that it can go for. Kiwi, same kind of a story. Very, very strong 1, 2, 3, 4 days of engulfing levels. We are tapping out here a little bit. The resistance point here at the 68.50 is pretty significant. But if Kiwi can clear the 68.50, there really is nothing stopping it all the way through the 69 level. So as far as we know in terms of momentum, the front of the week really favors continuation trades in both the Kiwi and the Aussie, especially if Asia sort of picks up the baton and really moves forward on these risk-on flows on just essentially the idea that relief rally is here. That seems to be the big setup into the front of the week. If we get positive data, all the more so to see if we can fuel ourselves past those big resistance levels with 69, the key resistance in Kiwi, 72.50, the key resistance in Aussie, and 32, the really, really big make or break level in dollar CAD. Wish you guys the best luck, the best trading. Boris Schlossberg, over and out.